little bit confused, but it's more of a mixed bag because we have the vaccines that have come out, and that news has been very positive. And this morning we received some even more positive news on the vaccine from the British pharmaceutical company AstraZeneca, which is saying that the population that is most at risk, or 65 and above, their vaccine in the phase 2 trial had come out with some very positive results, and that the people were not getting the illness, the COVID. So that's more positive news. However, for the market, that's been kind of muted. It's been a bit of where, okay, we love that news, but at the same time, when are we going to get it? When is it going to come out? And that's the part that I think that uncertainty doesn't help the market that much, because the talk is the vaccine itself may not get distributed to the general population until close to the summer of 2021. Now it might be a bit of an exaggeration. I mean, Pfizer's in talks to get this thing done with the government, where it might be 2 weeks, and the next thing you know, government says, go right ahead, So that's the first part. But once again, it's a big logistics, I don't want to call it nightmare, but it is a big logistics challenge, how to get those vaccines out there to the Walgreens, to the CVS's of the world, and then to the general public in that sense. And you have to remember, we're a population of 300 million people. So we have unique challenges here. The CEO of FedEx has said that they're ready, so long as it's within the continuous 48 states of the United States, that they would be able to get a vaccine and its special challenges there overnight. And he's reiterated that promise on all the media outlets. So there's the good, there's the bad, and there's the challenges that lay ahead, and that makes for an uncertain market. I would use it once again as an opportunity to go and buy some dips in stocks that you've been eyeing that you might like. I would encourage people, if they can buy these stocks on the dip, to go ahead and do so, because they are part of any core portfolio. Also, because the vaccine is going to take some time to get out to the general public, these stocks are going to continue to benefit. And when that advantage has been exhausted, then you have to decide what you're going to do for yourself in terms of the Zoom, the Microsofts, and the leaders of the world in terms of the pandemic advantage stocks. So yeah, but I would take that as it comes, because we're seeing a lot of stop starts in those stocks. The minute the vaccine came out, everybody wanted to get out of those stocks, and then we're shuttering back in, we're closing back, New York City is closing back in, and other places, then all of a sudden those stocks rose 3+%. So it's kind of a mixed bag. You got to be on top of the situation. It's fluid, it's ever changing, and when the time comes to make that decision, you should be right on top of it. Just as you are if you're going to buy the dips, you have to be ready to get out if that's what the trend is telling you. It really depends on you. You have to think, some people near term is 1 to 2 years, all right? Long term is defined in our industry, it's defined by 5 years, 10 years. So if you're an investor and you're thinking 10 years beyond, that's long term, and you can absolutely take the risks that you need to take at this particular moment. However, if you are needing those resources within a 1-year time frame, I would absolutely not take the type of risk that a person might normally go into, because the time frame is off. Your goals do not align with the markets as it stands right now. A lot of things could go against you, and you need to be prepared for that and invest accordingly. I think that's important to remember. And also, if you're long term, you still need to be careful. You still need to weigh the risks and know that, yes, I do have more time on my side, but at the same time, I want to make sure that I'm doing this intelligently. I mean, we talk about tech all the time. What people forget is outside of the United States, there's great opportunities. I mean, we believe that the Pan Asian region is wonderful opportunities right now. For the moment, we do like Korea, and we are taking some risks there. We do like Japan and taking more risks there as well. China, because it's simply devolved, I mean, it's coming out of the pandemic right now. We're not so high upon this particular moment, but that could change in the next 2 months. So we're starting to see GDP growth in China. We're starting to see things change about. We also are seeing that Warren Buffett, one of the most successful investors of our time, is going into the Asian region, primarily in Japan. So that bodes well for people who are going into that sector. It's just a matter of what stocks are they going into? Is he going into? I would say be very careful and not put more than a stated percentage that you could afford to risk. almost 25 years ago, Hong Kong was a very big high flyer, their market, the Hang Seng. And, I remember one year they made 98%. You know what happened the 2 years after? They lost that and more. So long as going with open eyes and smaller percentages of the portfolio, they can really be a nice value add to the Asian countries. Can be a nice value add to your portfolio, and I wholeheartedly support it.